Welcome back, everyone. Today I saw a chart comparing the main Chinese and Indian stock market indexes, and to my surprise, India's Nifty 50 index outperformed China's Shanghai Composite by over 2,000%. That is truly astonishing. Well done, Bharat. You've finally managed to overtake China. But wait a minute, we hear people say that the stock market is not reflective of the economy all the time, especially if you watch American news channels. So what's going on? Why is India still so far behind China in every single metric which countries use to measure themselves against each other, things like GDP, HDI, poverty rates, and all those other things? Later in this video, I'll inform you about the key structural differences between China's and India's economic foundation, which makes this stock market chart kinda pointless. But first, let's respond kindly to our Anbakt of the day. A user named Arkan Bharat 209 with a profile picture of a fictional India who owns all their neighbors' lands. And you guys wonder why people make fun of you. Getting destroyed at Aksai Chin just wasn't enough for you, huh? Now you must live in dreamland and brag about this fictional Arkan Bharat. Anyway, they commented the following. Lol bro used 2022 data for India. I know many can't digest the truth that India is now the fourth largest economy with 4.19 trillion US dollars GDP and ASEAN with 3.93 trillion US dollars GDP. I hate to break it to you, bud, but your figures are half wrong. The International Monetary Fund's most recent estimates for 2025 have India at 4.19 trillion, as you said, but they have ASEAN as 4.25 trillion, which is slightly higher than India. Sure, I agree that they are basically the same, but there's no need to be offended and use misleading figures, typical angry netizens. If you're going to make a claim, at least back it with proper data. And anyway, the point of my previous video comparing ASEAN to India was to show that a regional bloc with less than half the population can match India in GDP and excel when it comes to other metrics. Alright, on to the main point of the video. India's stock market is winning over China's. But let's be real, the country is still losing, and massively at that. Yes, you heard that right. If you only looked at the stock market charts, you'd think India is the next economic superpower. The Nifty 50. The Sensex, these indices have been climbing for over 2 decades, beating even China's stock market in terms of returns, and climbing over 2,000% returns in the past 20 years. But let's be honest here. Does that rising line on a graph mean the average Indian is living better today? Nope, not even close. Think about it. To invest any decent sum of money in the stock market means you must have disposable money in the first place. How many Indians do you think have money that they can spare to do such things, especially 10 or 20 years ago? I'll remind you that 80% of Indians still live under $6 per day. Sure, that can buy you 3 curries a day and keep you fed, while probably paying for transportation bills and rent for a slum, but investing? Hell nah. So, while India's stock market went up, China's people moved up. Over the past 20 years, China has lifted hundreds of millions out of poverty, built world-class infrastructure, more high-speed rail than every other country combined, and turned its factories into the beating heart of global manufacturing. Remember that China manufactures over 30% of the world's goods, India, around 3%. It's still struggling to provide clean water, working sewage systems, public toilets, basic healthcare, and decent jobs to its people. So, what's going on? How can a booming stock market exist in a country where so many are still trapped in poverty? Here's how. The Indian stock market has been on a tear, partly because it's heavily weighted toward a few massive conglomerates. Think Reliance, Tata, Infosys. These giants dominate the indices, and when they do well, the market looks healthy. But this isn't the kind of broad-based growth that transforms a country. It's what economists call narrow wealth creation. A few firms rake in the profits, investors cheer, and politicians boast. But on the ground, little changes. It's wealth inequality in action. Meanwhile, China took a completely different route. Instead of obsessing over stock returns, that only benefits the already wealthy. China focused on hard assets, factories, railways, ports, machinery. They didn't chase paper gains, they built real things. And over time, that strategy transformed China from a rural backwater into the workshop of the world. Think about the difference like this. India sells hope, China sells hardware. This fundamental difference in economic philosophy explains a lot. India's economy leans heavily on services, IT exports, and speculative investments. The startup scene is buzzing, sure, but it's also filled with overvalued apps and underpaid gig workers. Real manufacturing? Still underwhelming. In contrast, China built entire cities around industrial clusters, electronics in Shenzhen, automobiles in Chongqing, textiles in Guangzhou. The results speak for themselves. Let's talk brands. Can you name 5 Indian companies with global consumer recognition? Tata and maybe Infosys, if we're being generous. But apart from that, probably not. Meanwhile, China has pumped out brands that are household names across continents. Alibaba, Huawei, Lenovo, BYD, DJI, just to name a few. These aren't just logos, they're global players competing head-to-head with the West. India's most valuable companies, on the other hand, are largely focused on the domestic market or provide back-end services to foreign giants. Here's the kicker. Even though China's stock market didn't perform as spectacularly as India's, it doesn't need to. The wealth was spread through rising wages, urbanization, and a massive expansion of public services. In India, despite the shiny stock performance, income inequality has widened, public infrastructure is crumbling, and human development indices have flatlined. India's per capita income still lags far behind China's, its HDI ranking, lower than Vietnam and even Bangladesh in some areas. China's rural poverty alleviation program has spread hundreds of billions of dollars from wealthier coastal provinces to inland poorer provinces and has lowered inequality. It's not perfect, of course, but it's a damn lot better than whatever India is doing. And to make matters worse, India's stock boom often gets framed as proof of a thriving economy, when in reality it's a reflection of speculation, not substance. It's kickstarted by the ultra-wealthy who can afford to play the stock market and wait out any down years like Monish Pabrai. Then retail investors pile in, often with little protection, driven by nationalism and dreams of fast returns. The government pushes IPOs like LIC as if stock ownership alone will build prosperity. But here's the hard truth. You can't eat stock returns, you can't drive on a Sensex chart, and you can't build a future on hope alone. You need hard assets to first build a foundation for your country and people, just like China did, and just like every other already developed country did, like the Western countries who industrialized in the 1800s. India's obsession with stock market performance is masking deep structural issues. The country lacks a solid manufacturing base, has poor job creation, and continues to ignore basic welfare needs. China, by contrast, got the fundamentals right, even if its markets weren't always investor-friendly. And this is where it really stings. China's less impressive stock market was never meant to be a trophy. It was a tool, a secondary piece in a much larger plan. India treats its stock market like a scoreboard. China treats its economy like an engine. China has many state-owned enterprises which partly receive funding from the government and partly receive funding from issuing stock on the stock market. It's the stock market working for the people, not the other way around. So I reiterate, India's markets have outperformed on paper, but China's people have outperformed in life. This is observable in every single metric and measurement for life, and anyone who denies it is a blind follower. If you found this video thought-provoking, then hit that like, comment, and subscribe button. Thanks for watching.